Alright folks, good morning and welcome back to Monteki.com. It is April 6th, just around 9:30 a.m. Eastern Standard Time during the New York trading session. Today's chart of the day, we're going to be discussing the Aussie Canadian dollar. As you can see, currently on my screen I have the 4-hour compression visible. First off, what I want to do is show a very dominant line of supply that is forming in this market on the 4-hour compression. And when I see supply and demand on a 4-hour compression either being respected or violated, that is not a thing that I can ignore, and I take opportunities on those. So what I'm looking at here, first off, overall in the Aussie CAD, is from here at around the 0.94 price level, we have seen a nice bear movement here down to about the 0.92 price level, as you can see right there. What I've seen the market throughout here do is create lower highs and lower lows. So what I'm looking here for is either reversal market, looking for a bull movement to come in, or for continuation being the bear market. At this point, truth of the matter is that I'm looking for a continuation here of the bear movement. And let's go ahead here and connect the dots to create our dominant 4-hour supply line, being our first, second, and recently formed third point right here. And let's just go ahead and do that at this time. Alright, and there you can see when you connect those dots, you get the visibility that you need to see here of the supply dominating this market. Now, what's also interesting is that we're seeing this movement follow the path of fib retracements, fib expansions. And what I'm talking about is from the top here of this movement, we've seen a nice solid initial movement in this market. We've seen a retracement, we've seen a continuation movement, we've seen a retracement, a continuation movement, and now we're seeing a retracement once again. So what I want to do is go ahead here and overlap additional technical analysis, being mostly my fib expansions and fib retracements, and see what I have coming from there. So let's first off take the fib expansions of the initial movement that we have here in this market. And as you can see, I achieved those by taking the top of the movement and the bottom of the movement. Now moving on, what I want to do is further analyze the movements that are occurring here within the market that you can see. But before that, I do that, I would like to overlap taking the top of my movement, being at this point here, my fib zone, so I can have a better reading of potential profit targets in this market coming from fib zones overlapping fib expansions. So let me go ahead and do that, pull up my fib zones here and align them to the price of the starting movement. And you can see there at the 0.9381, I've applied my zero of the fib sequence. From the zero fib sequence, we've seen this movement make a nice 100 pip or so movement past that 89 fib zone. A pullback here in the market, definitely a retracement. I can see that visibly without having to even place my retracements. And from there, we had a 61.8 fib expansion payout. Now this is where this movement begins to get very interesting towards an opportunity to look for a continuation movement of the bear market. What we can see is a retracement here, creating our second point of line of supply. From that second point line of supply, we saw the retracement find resistance and continue on to its next payment, being the 100% fib expansion. Notice how the market came to a stop at that point and once again retraced and created the third point in the supply line, as you can see currently on my screen. And what we can see here is that this market is now turning once again off of that line of supply. So this third point here in this market is going to show vital here in the continuation of this movement south. Now, what I did not do before is I did not apply my fib retracements, just because it has become second nature to be able to visibly see these. Well, let's just go ahead quickly and walk through those. You can see our initial movement retraced here to 61.8 retracement of that movement and then made it 61.8. From that 61.8, we had the market retraced to its 50% area, which was conveniently creating the second point in the line of supply. And from here, we've seen the movement down to our 100% fib expansion, and when we pull back our retracements and apply them to the current line, you can see that we have had this market retrace within the 23.6 and 382 areas. Not necessarily making it perfectly up to that 382, but within about a 5 pip range. We can see the top there, also creating a third point of supply, and we can see this market turning very nicely here on the 4 hour. So what I'm now pointing towards is a continuation movement here, coming off that third point of resistance, creating our supply line for a continuation down. Now, where are we expecting this market to go? Since we have taken out our 61.8 fib expansion and our 100% fib expansion, what we have left is our 127.2 and our 161.8, as you can see below. Now, if you remember, areas that we look for overall completion movements are areas where we see overlaps of our fib zones and fib expansions. And if you look here below, what you can conveniently see is that we have an overlap coming at the 161.8 fib expansion with the 233 fib zone. Now this is creating here a very nice area of potential profit in this market, sitting at the area of the 0.9150 price level on the Audi CAD. Now what I'm going to look for here on a trade, specifically what I'm going to look for is an overall attack, because what I've seen so far in this movement is I've seen the market respect not only the retracements, but furthermore the fib expansions. Notice how this market has created those stop points. Now, since we are having this level here below overlapping the fib zones, is going to be my overall price target. I will not look to take profit at the 127.2 fib expansion. I want to go for the full completion here down to the 161.8233 area, coming at the 0.9150 price level once again on the Audi CAD. My entry will be coming off of price action in the smaller compression. I usually take my 15-minute and perform price action off of that. Now, what I'm looking for here at this point is exactly this. If you look at this 15-minute compression, what you can see, the low that we have had here in the market is coming at the 0.92 price level right there. And from here, we have seen a rush in the market 60 pips to create the third point. There is that supply line coming off the 4-hour compression. Okay, and from here, what we can see is this market turning very nicely. Now, what I want to do is I want to make sure that this is not a New York fake out being a retracement, and that we are not going to see continuation here. And how I will prove that is by using my retracements. And what I will look for is the retracements of this movement to this movement right here to be broken. And when that occurs, I will enter on the market breach of the final 61.8 retracement coming at the point that I'm going to apply at this moment. And there you can see the area that we are looking for to be broken. Now, just notice here very nicely how this market is respecting that 382, the 50%. And what we have here below is that 61.8. And this is going to be the retracement here that I'm going to look for to enter on the rally continuation south here, being a sell in the market. The reason why I want to see the break of these retracements is because I can see already at this point that we are seeing respect, as I noted, of the retracement. So I do not want this to be here a New York fake out being the retracement and then see this market continue and break through that supply, which would in turn create a massive movement north because we're seeing a break of such a substantial 4-hour supply line. So what I've just done is created a scenario in this market on the Audi CAD that I'm going to be trading. First and foremost, my interest is going to set here on the break of the 61.8. Once we see a price action breach of 5 to 10 pips on this market below that 61.8, I will enter it south for the overall payment, as we noted before, down at the 233 fib zone overlapping the 161.8 fib expansion, coming here at the 0.9150 price level. Now you can see here is about a 10 pip difference in this market that is acceptable. When we have that, we take the first level of the two that create our profit zone to make sure that the market fulfills our profit taking. So folks, that's what I'm going to be looking for on this pair. Once again, on the 15-minute compression, if I see a break here during the New York trading session of the 61.8 and I see a nice 5-10 pip candle fall below that, then I'll definitely get in the sell at this area. And I will be putting my stop up above the point where the supply line is and be adjusting it accordingly, meaning that I will be trailing my stop here according to the supply line, because if this market breaks this supply line at any point, I want to exit because the market is then showing me that demand is in play. So that's what we have, folks. If we do not see this market continue a movement south and we do see the retracements here hold and come true and break that supply line, then we will come back, set up a new video with new analysis, because we'll be very interested in trading the break of a potential 4-hour supply if we see that occur. So again, short term, interested here in seeing the break of the retracements. If I break the 61.8, I'll have an entry at about the 0.9220 price level, targeting the 0.9150 price level, looking for a 70 pip profit here. And assuming at that point I'll have around a 30 pip stop, just judging on where the supply line will be most likely at the point of a potential entry opportunity. So that's what we have here, folks. Thanks for joining us once again. We'll be back soon with a further update on the chart of the day. Until then, have a great day and happy trading.